What's going on, YouTubes? Time for a recap. So this morning, as we posted on X here, we had a very nice long sentiment this morning for our chat. We walked through a really nice grinder to the upside. We found a whole lot of markers that said we were going to drag to that upside sentiment unless we were under yesterday's lows. So my biggest over under today was as long as price action maintains above the prior day low, which is Friday, we should grind up to the golden pocket. So we had a really nice upside tick. We did a $5,000 morning on the Top Step Expresses, a lot more on the live accounts and other funded, and we're doing pretty good for the day. So let's hop into it. So the biggest takeaway, I want you guys to always start on that daily and weekly chart, starting off the week. And we had a rejection last week of that 100 EMA, just kind of sat there, and we figured we'd have a little, fun to the downside. If you caught our Sunday stream, we actually called the entire downside. So hitting the SPY on Friday, 100 EMA daily, that was a big precursor for my Sunday short call. So if you did tune in for our Sunday, we did a little tiny Sunday, what am I doing? Open right here for the downside. And what we did is we had short biased under yesterday's close, like it says here. We can delete that. And we had absolutely no interest in longs until it was over 5,700. If it got over 5,700, if not, it was a guaranteed downside. And we can talk about why. So we had a bunch of different golden pocket no tags stacked up back here that needed a couple back, not even a couple back tests, a lot of back tests. So I was looking right here for a final short target through the night on scalp, which is more of a fast pace move, not something that hold all night, but we did have precursors for all night too. So let's take a peek at this. So the 5-minute is what I just did to the high low to the downside. This is what we had on. And then we talked about a nice scalp target being right here, 56.84 from the prior day, no golden pocket tags. Now, when you take this 5-minute high low and you see it walk down, speed break the 1618, retest the 200, speed break the 2618. What do I mean by speed break? Well, when we make a Fibonacci high-low, we got a 5-minute high-low, we pointed to the downside. We're messing with extensions, right? Not retracements. Retracements would be back inside the candle to the golden pocket. We're looking for extensions. When the price action comes to those extensions and breaks through them with an amazing amount of speed and doesn't bounce, that means the continuation is higher probable. So when we come into the 1618 at 5682, notice the price action kind of dwindled a little bit and then snapped through. Now it did retrace confirmation, right? Clearly setting a weak tone there, which is great, and continue down. But the same thing happened at the 2618. So we could actually expect 3618 on the way back down. Let's see how close we got before we bounced. So that just one 5-minute open candle pointed to the downside, walked the fibs with speed breaks. Remember, that's when the price action goes right through a Fibonacci point without reacting very well of support at all, because we're obviously going to the downside. So as we got down to that 3618, we shied down here a little bit. We shied down. And then we had a grind up morning. Well, we got really close to our 3618. Then what happened? Well, it recycled back up because these speed breaks need retests. So the biggest Fibonacci you could have used here is the 100. So our rule set, let's go back to the 5-minute open, is when you draw a Fibonacci, a higher percent chance we have is to hit the 1618 than retrace to the 100. Okay? 5690.90. So if we do not hold that 100, pop back up to the 100, or 1618, sorry, let me redo that. So if we do not hold the 1618, pop back to the 100, and then continue to the downside for a standard breakdown, we know that there is a heavier speed to the downside and a higher likelihood to continue downside because the Fibonacci candle we used to draw, once it hit the 1618, never came back to the 100 fib. It just speed broke through right to the 2618. So we know offhand in psychology land here that the market is extra heavy. So we came all the way down to the 2618, finally chopped that for a while. Even though we speed broke through it, we chopped it, came back, but all it did was retest what? A confirmational moving average catch up. Well, let's take a peek at that real quick as well. The 100 EMA being my favorite in the green here, the opening candle, again, speed broke the 100 EMA. And after 100 EMA breaks, you look for a retest before continuation, right? So we have a broke level being the 100 EMA, and the price action never came back. You notice here we ran away from that 100 EMA very nicely. So if we come into the next tag of the 100 EMA, which in my opinion is the first tag, we came back up here from the 2618 support area, chop, right? She chopped, held, popped into the VWAP 100, and continued down to the 3618. not bad. But you could have played one here from the 2618 back up to the 100 EMA because we did get a break of the 100 EMA and it was hunting for that back test of the 100 EMA before it kind of continued. So let's talk about our grinder for the day, right? So that was our overnight session from our little Sunday talk. And what's next? Well, we had a couple different things going on. We had a beautiful little algo here. I'm going to kind of leave him out, even though he worked out pretty well because we have too many overlapping zones with 9 a.m. data as well. So we're just going to talk about the big zones today, keep it real simple. So we had a yesterday's lows over under, and that is obviously the 100 fib. Every day we come into the market, we draw from the high to the low of Fibonacci, and then we look for what way the golden pocket wants to articulate. This is where it gets really interesting because if you go to the daily chart on a no golden pocket, so remember, golden pocket is when you draw a fib from the top of a candle to the bottom of the candle, and the golden pocket is the 61.8 to the 38.20 for us, right? I only use those. I don't care about any other extensions for myself. When we see this, we generally don't see 3 daily candles in a row without golden pocket tags, right? So one candle right here, 4:30, as you see our indicator showing 3 white bars, no golden pocket tag. 5-1's candle is, again, you see the indicator here, triple white bar, no golden pocket. Friday, no golden pocket, right? Because we didn't tag here. And then this is the new day right here. It's a Monday, right? So we opened up on a no golden pocket tag lower, which means the price action opened lower down here. You can see where the candle open is right here for today. It's 562, about 61 or so. It did not hit the back tested GP, which I zoned out. You can see the big gray box right there. I zoned out that GP. That was our short target before going back long because the top of this golden pocket is 561.67. Okay. So 1, 2, 3 candles in a row without a golden pocket usually doesn't happen. So one of these golden pockets we're going to get tagged today 100%. It was either going to be this one or this one. I picked the upper first. And let's go over why. So that's a big key takeaway there, giving away a lot of sauce right there. Pay attention, replay that a few times if you don't get it. So what do we see here? Here's yesterday's lows. Our short had to be under yesterday's lows down to, as you see here, short target. This is the channel in question. I just talked about that we drew. And where's that long setup right here? Well, we did come down and tag that. Was not an easy short. So we actually didn't play the short at all because of what this price action looked like. There was no real play. So you've seen these snapping wicks, right? And something that you need to understand that just because something pierces a level, right? If price action comes down through yesterday's lows at 562.38, it does not mean it's going to continue. It just means it's sliced that level a little bit. And you notice a lot of these 5-minute wicks slicing under the level. But where do they close? More importantly, where are the bodies, right? We're above yesterday's lows. None of these wicks really matter until trend. This is why confirmation trading is so important. If we would have broke yesterday's lows, continued back to yesterday's lows, and continued to trend, hey, we have confirmation of trend to the downside. It's not just a bunch of broken underlevel wicks. Okay, cool. So we never really gave up our long thesis. So even though this was a short target, this was not really a short play for us because of the speed in which it broke. Now, well, and the closes obviously here. So we were very adamant on walking it up, and let's talk about why. And how we got all of our targets, right? So we had the algo targets here, and then we had this consolidation, which was kind of nuts. I posted out, well, let me put that back on. I posted out 563 for a prior big daily level, and it had to hold 563 to maintain long. And then let's move into the oscillation indicators and what helped us with the trade. So I talked my chat through this whole trade this morning, where all we needed to do is hold 563, and we were going to come into the golden pocket, right? Because we were above yesterday's lows, right? So as long as we were above 562.38, you can see my big red sentiment candle right there going to the downside, or drawing rather. We couldn't be short until we were nicely under yesterday's low. There's no interest. I had an interest only in long first, and we could have went short later on if the play evolved that way, but it didn't. So let's talk about it again. So we moved into 563 prior level, and anything above that, anything above VWAP, anything above 100 EMA, as you see right here, was that last final dip buy. The oscillation indicators were the ones keeping us in the trade all morning, even though it was very slow and choppy. And this is where narration of us helping you guys through these trades helps out a lot. We don't just hand out entries and exits. I hand out best case sentiments and why we're trading the trade. I'm not here to be an alert service. That is ridiculous. So as we bring over the VIX, I wanted to take out some big key points of interest for a volatility index. Opened up in a very large gap up, right? Overnight price, pretty good. We actually filled one of the gaps we needed to fill this morning, which was nice. We came under yesterday's highs and started heading back down. So my first couple of thoughts were, okay, we need the VIX to chase down the 100 EMA to either provide support or break and continue down to this gap. So as you see this big gray channel, this is the jobs data gap from Friday on the market. So obviously when the market went shpew right up to the upside, SPY and QQQ off the Friday jobs report, we left a giant VIX gap. Now this gap came into play today, and we said, well, if we don't hold the 100 EMA and we start heading to the downside under the green 100 EMA, we'll have a chance to fill this today and come down, resulting in the market going up because VIX is coming down. And if you notice, all I commented on was MACD today. I said, guys, the MACD is swapped very good at 9 a.m. We are looking very, very clean to the downside. The moving average separation down here is working very well. We have a nice tall seller wave on the histogram, and the RSI is pretty cooked to the downside. And then we have more targets. What does that mean? Well, the price action starts up here in the 24 area, but during that 24 price action break, the MACD was just getting started to the downside. So those moving average crosses were just getting started to the downside. That was our hypothesis. Why did we assume the MACD could keep going to the downside? Well, because we had this gap target from the jobs on Friday. So if we got under the 100 EMA, the VIX was going to follow suit and come down to this gap fill. And the MACD was telling me once it swapped back here around 8:45 or 9 to a really clean cross downside, we were going to go down because we had further lower targets on the VIX. That is just statistically makes the most sense. So inadvertently, the market has to go up. So we talked ourselves through this whole trade today, and we targeted yesterday's golden pocket, which is Friday's. Here's that golden pocket right here. And that's that. So everything above yesterday's lows netted us the golden pocket tag. And as you see in the sentiment picture in my first one, I had a green sentiment as high as the 50. That's best case scenario. And all we had to do is maintain above VWAP and trend, right? And let's talk about some of these shy points real quick to end the video as well. So shy points are something where a price action will come all the way up. Oh, let me remove this take profit on the way up zone here. It'll shy something and then it'll come back. So let's talk about QQQ compared to SPY today on the shy points. So if you look at QQQ, we have a very light blue line at the top. This is an auto-calculated pre-market high indicator that we have for TOS. It's free if you ever join us in the group. 486.77. So notice during that time, this push right here, that's the 9 a.m. ISM candle. The data today that came out at 9 a.m., we didn't quite get to that pre-market high in SPY, but we did in Qs, didn't we? Yeah, we sure did. So the pre-market high was tagged on QQQ, causing a knee-jerk reaction to the downside to continue back up to its golden pocket. Well, here's where it gets interesting again on SPY and how the algorithms utilize magnets in shy points. So because Qs front ran, which means it moved higher, faster, and better than SPY today, it front ran, right? The pre-market was never tagged on SPY. That was that algo candle we talked about. I wasn't going to speak on too much today, but that was the high of pre-market. So you see SPY break up off yesterday's lows right here, runs to the upside, shies the pre-market, which means price action almost hit, right? So in my head, I'm like, well, Q's hit. So if Q's does a pullback and then maintains bullishness, we'll drag SPY back up to the golden pocket as well, and at least the pre-market high. So I told everybody to get long right here at VWAP and 563. And I added in the biggest amount I could right here at 563, held on for dear life, and up we went to the pre-market high, calling from VWAP and 563 for us, a minimum of 15 points, maximum up to the 50, 23 points. That's how we did our $5,000 and our big $3,300 on our main account. And that magnet, because it shied, just had a very strong conviction. Let's talk about the oscillation indicators real quick, just in case. The RSI, I like to put a price level right at the 50 of the RSI. 70's high, 30's low. I take 50 in between that, obviously 20 points for each above and below. So as long as the 5-minute chart here is telling me that the RSI is maintaining above that 50 point, I also know that uptrend is in a high viable spot, MACD as well. Now that magnet, though, was the biggest thing keeping me in, because again, SPY shied the pre-high, slammed into the pre-high, looped that 5, slammed into that 50. Let's take a look at the 50 real quick, last but not least. Here's the golden pocket again of yesterday's 565.38. Oh, what do we have? Shy and a shy. So right away, my brain goes, okay, well, if we have support over 61.8, we have a shy at the 50. I know if we're going to hold the 61.8, we got a great statistical advantage chance to come actually tag the 50 because of these shies. And we call this a 10 SMA loop. You can check out my indicators we use section. I teach people how to use the moving average loops as well. Price action, this is a 10 SMA in the blue. The blue comes up, hits, shies, not once, not twice, but 3 times here, shied that 50, came down, had to trap some of those high buyers, right? The longs that are just buying highs for whatever reason, you know, a 35-minute runner high, not something you buy right there. So as it comes into the shy points, it breaks down, goes under our 10 SMA in the blue. All it does is create a loop though. and comes right back to the 50. We see this a lot in moving averages for continuation price action at the fastest point, which means one of the pushes up needs to be very quick and needs to be within, an hour of each other. And that 10 SMA hold you see in the blue there finally broke. And the only reason we consider it a loop is because there are candles fully developed underneath the 10 SMA, not candles crossing through. That is not considered a loop. That is just a break a little bit through and then up. This is an actual loop because the entire candle is developed under the 10 SMA, resulting in a slingshot back up to the 50 and a slingshot again. It just replicated itself all day. Last but not least right here. Well, I said that already, but one more. Broke up to the 50, shied the 38.20, shied the 38.20, shied to the 38.20. Came back down from those shies with that loop, hit the 50 and right back up to the 38.20. That's how you play trend, or at least I do. I hope that makes some sense, and I hope you got a little bit out of this recap. Thanks for tuning in. If you want to trade with us live, we got the first link in the description down there. You can come hang out with us in the chat, and I talk ourselves and our team through these trades, talking about each and every confirmational point on why we're taking it and the flow of the trade. If you want to join in on a sweepstakes giveaway of a Top Step account or just cold hard cash, I have multiple people giving back the entries they won. So every Saturday in their live stream, we give away free Top Step accounts because we love Top Step and it's just cold hard cash. It's great for advertisement, right? $50 or $100. All you got to do is subscribe, like the video, and make sure you comment. That comment, I take a random picker, I draw up, and as long as you're chilling with us, or at least I can catch you in the comments, you win a free $50 to $100. That's all you got to do is a comment. That is it. That sounds good to you? Give that a shot. If not, we'll see you on the next YouTube video. Thanks for tuning in.